Right, thanks for joining me, everybody. As it's the weekend, I'm not going to hang around. Going to get straight into this, and I've just been doing my prep for the week ahead, and I just want to share that with you. Let me just hang on a second. I can hear my own voice. Let me get rid of that. Right. So what I'm going to look at is the big picture for the Dow, the indices. I'll look at the German DAX. I'm going to look at the pound, the euro, the gold and the oil, and a few stocks as well. And the reason why I've decided to make this public is because I think there's a lot of misinformation out there. So I just want to clarify in my mind and clarify in your mind as to what we might expect this week. Now on Friday we got US jobs, and last week we saw the weekly jobs with the biggest ever jump in unemployed in the US, understandably because it's a massive demand shock, and there is the threat at the moment of even New York going on lockdown quarantine. So my personal view is the sooner these cities as dense as New York close down, the better. So the quicker we can get rid of this. Also, I think too many people, for my money, too many people are way too optimistic about this market. We've seen it we'll take a look at what happened last week, but we'll as we think about the week ahead. But I think people are too optimistic for this. All we're seeing is at the moment is a monthly bounce, off some monthly pivots, and I think we're going to be able to tell. We're getting some early indications from the sort of reaction we get in the markets on Monday. But as we get to Chinese manufacturing data and a lot of European data midweek, and then start to approach the monthly jobs numbers, then I think we can get a clearer picture of where we are. Anybody got any questions, then punch them in. I'll do my best to answer them. If I don't answer them straight away, I will come back to them. Right, so let's just show you what I've been looking at the moment. So we're going to start with the Dow. Now let's pull up the monthly chart here. So on the monthly chart here, on this bar chart, it's just got a basic MACD at the bottom and the RSI as well. So you can see from this chart here, I have got, you can see the divergence. Divergence is crucial in reversals like this. And I posted this in my trading room. I remember on the 16th of February, I occasionally have a look at what other guys are talking about. One particular expert was referring to the DAX, saying, well, the DAX moving averages are all wide open, keep buying dips. But we were at major resistance levels up here and very divergent. And so I was posting in my trading room that we are long overdue a pullback. So here we are. I've got the fibs on, let me pull back from this, got the fibs on March 09 lows and 2020 highs. And you will note that we have almost coming to that 50%. Now the actual low of that was 18,140, and the way I've got my fibs, it's just literally a few pips under the 18,000 mark there. So that's on the weekly. On my monthly. On my weekly, I've got I've now got this trend line coming down from, so I think I might redraw that. I'm not happy with that trend line. I'm going to redraw that. I'll take it from let me just, I want to make sure this is whatever I draw, I really insist on it being accurate. So let me just put this on the new low that we've got there. Now you notice that one of the things that I notice, one of the things that you guys should notice, is that we have got just going to get my pen. We've now got the effectively a channel from, it's a very, very neat equidistance channel here from this trend line I've just put on here. I had a channel like format from the last place I took it, but from that low there and the high from a couple of weeks ago, we've formed a nice neat channel. So if the bulls have got this, and we had decent lift off a monthly support last week, but we didn't close above this 50% on this particular chart. Now the fibs are done differently here, so I'll come to that in a minute. So despite that large effort on the part of the bulls, we did not close above, in fact we didn't quite even get to the previous week's high. And here we are closing, we closed at 21,547. There's a lovely short into the Friday close. Last 3 Fridays out of 4, we've seen very handsome 500 plus pip drops in the last 20 minutes. The exception was the date of the 14th. Friday the 14th we did not drop. The 2 Fridays prior to that and last Friday we did very handsome drops. If you've got problems with the sound, you may have to log out and in again, Walid. But like I said, sound appears to be good. Right, okay, so here we've formed this channel. Decent bounce off of the monthly support. Now on the daily support, this is the way I love to do my fibs on, and this is one of the most important area I've done the fibs. So I'm going to show you a really interesting analysis technique on the 4-hour in a minute. But before I get to that, let's just talk about these fibs. These fibs are on the 2019 highs and lows. They're ranged on the 2019 range. As is a habit I always do with my daily chart, doesn't matter whether it's a stock, a currency, a metal, I like to see if the fibs are sticking to the previous year's range. And you'll note from this that we've got at the low, this is why I love it so much, because at the low we've got a 161 extension. Here's the 127, and this is the 2019 lows. So on Friday, all we did, well, the back end of last week, all we did was knock into 2019 lows. So the fact they're respecting this fibs, anybody who is not au fait with fibs really needs to get a complete grip with it, because it's important in my book that the fibs is the code of trading. So if you're not familiar with what these levels are, I'm sure you are, most people are. If you're not familiar with them, then do as much training as you possibly can on fibs. Okay, so the daily chart here is performing exactly as I would expect. Right, one other aspect before I talk about the 4-hour fibs, let's just go to Elliott wave. And again, Elliott wave and fibs are crucial to my trading. Crucial to everything I do in my trading. So we've got a 1, 2, 3, 4, 5. We've had an A wave correction. So it's a corrective wave at the moment, nothing more than that, which is what alarms me about some of the bullishness that I'm seeing amongst some people that are posting out there on videos. I'm just alarmed that a lot of people are talking about buying stocks. This is an environment for day trading or holding for short periods. To my way of thinking, this market has got a long way to go before it forms a bottom. So the way in which this market reacted on Friday, to me, suggests that this is a major level, and any push into this zone here from Thursday, Friday could see us come back to 20,885. If we close under 885, then I'm looking for this to do a proper test of 18,000 and possibly even more. I think we could potentially be in for another, if this is really, if it's as bearish as I think it is, I think we will see another 20% drop from here. So so as we go into Monday, I am looking for, I'll come to specific levels for shorts in a minute, but I'm looking for this to fail and to see if we can first of all come into this support, and if we start closing underneath that support, then I think we can easily retest this and do a proper test of 18,000. Now normally with big numbers like 18,000, I normally expect the markets to come under here, and at this point, if we start to hold, then I'll get interested in some longer term holds. But for the moment, I'm saying this is 1, 2, 3, 4 to the upside, 5 to the downside. So that should, Elliott says you get a 5-wave move and a 3-wave correction. Now that's the complete move. In my book, where I think we have done the 5, but we've only done a 1-wave correction. So I think we've got another 2 waves to go before this is anywhere near any kind of decent push to the upside. Now, if I'm wrong, like I said, this 22.5 is going to have to hold, and then we could come up and see 24 plus. Okay, but I think we are here, and we could easily get 1, 2, a 2-wave that could come into here or much lower down before we get a 3-wave back into up here for another area of short. Okay, right, I want to show you something on the 4-hour chart which I think is fantastic, and it is a great way of trading this market. I'm going to keep drilling down to the time frames before I move on to the DAX and the metals, etc. I'm not going to spend a lot of time on the DAX. I'm going to spend the bulk of the time on these indices. Now, the indices across Europe and the US are moving in very, very similar ways. So you can template this and take it across. If you're a DAX trader, you can template this and move this across to your DAX templates, to your DAX charts. Okay, now what I've got here is, forget the wave patterns at the moment. Let's just look at this fibs on this initial move. So here we had a push, a drop from 29,650, give or take a few pips, to 24,700. Now this is a really useful method of looking at your charts. If you take that 4-hour level and use your fib retracement tool from that high to that low, a few things to note. You've got the leg 3, which is normally the furthest. So this is leg 1, this is the retracement leg 2. We had leg 2 fail just around 50%. Now in an ideal world, in a normal market, and this was way off the charts, in a normal market, I would have even looked to short up here, but this was not an ordinary market. This market was in panic mode. So all we got was a 50% retracement. So now the next thing to note is, once you had your fibs here, if you were shorting, then these areas were targets. Okay, this was in a pullback area, so we breached that before we came in, and then we hit this level here, and then the market was so weak all these highs sold, and we started to look at these lower levels. Now that's not the reason for showing, that's one of the reasons for showing you this setup. The other thing I want to show you from this is if I take this complete setup, this complete Fibonacci setup, and move it to what is the C wave, and I'll just very quickly show you why I call that the C wave for those of you who are not into this. We had a 1, 2, 3, 4, 5, 1, 2, 3 wave move. So that's a 5 and 3 wave move completed in a 4-hour chart. So you can take these 5 and 3s and scale them up or scale them down depending on the time frame you look. So that's the end of the C wave. Now, what I'm going to show you now is once you've got the completion of the C wave, I've now moved. I'll repeat that. I'll repeat this again so you can see what I want. That's the original fib setup. So if that's the end of the C wave, I'm going to push that down from that level there to the top of that C wave. And you can see that what you get from that is new targets. So from that distance there, we got the equivalent, the same distance took you underneath there into a 127 extension, into a 161 extension. So anybody who's clued up on this trading analysis technique, anybody know what this is called? Anybody know what this Elliott wave style is called? Just out of interest. Okay, I will tell you. No, I'm not getting any feedback, so nobody. It's called a pinball. It's pinball Elliott wave. So it's a way of projecting the extensions. You're projecting the extensions onto the next leg down. Okay, so what I'm now going to do is I'm going to take that one step further. So if that was our 5 and 3 wave correction, and that was the pinball Elliott wave there, let's look for another level. So we've got a 1, 2, 3, 4, 5, 1, 2, 3. So assuming for now, let's just assume that that is the end of the second 5 and 3 wave move. So we've had we potentially had two full moves on the Elliott wave. So if that's true, what I can now do is, if you're following this, you should know what I'm about to do. I'm going to drop that fibs on the 4-hour down to that C wave completion. Now, what does that prove? What does that show me? That shows me that if the market holds this, if we come into these levels here, if we come to Friday's highs and fail, or anywhere near the 22,000, anywhere near that zone, and we get a sell signal, we could wind our way back down to here, and if we really get bearish, we could come and see 16.5 and lower. Okay, so I've taken this, I've taken the original range from the first 5 and 3 wave move completed on the 28th of Feb. I dropped it to this level here on the 13th of March, and now I've potentially reset it for the 27th of March. Now, the other way you can use this, just if it doesn't drop, if I'm wrong, and we start closing above Friday's high, you can then use this for the extension levels. You can then project this and potentially buy this to see if you can get to 24,000 and 25.7. If you no, the short answer to that, well, it is no, I don't. If you Google it and do some research on this pinball, you'll see how other traders have applied it to completely different markets. Anyway, even if, let's assume for the moment, okay, let's be cynical. Let's say to ourselves that, okay, I've not used this before. It may work, but I'm not gonna trust it. You don't have to trust it, because the market's going to tell you if this is going to work or not. If this is going to work, we could potentially see a sell area in that level, or if we end up above 22,720, then start buying a pullback to 72.20 to see if you get to 24. So it doesn't matter whether you believe this to be viable or not. Whatever happens around this zone here in the early part of the week is potentially going to give you a big clue as to whether or not that's going to work. All right, now let's just go back to the bigger time frames a moment. Let's put that back on the daily. So that's my plan for Monday, to watch those levels there and to see if they are going to work. Now let's apply that to the DAX. Just out of interest, how many people in the room trade DAX? You can see I don't trade this as much, but if I quickly start putting the fibs on the monthly, I'm not going to spend much time with DAX, so I'm going to move on quickly. So if we are really bearish, we've got a lot of resistance up here at just above the 10,000, 10,100, 10,300. If that sells, if we get really bearish, then 7.5 looks is the next level. Let's look at that intraday. This is fibs on the big area, on the big whole range. So I would, if you're a DAX trader, start to look for 10,185. Close above that, we could start pushing back and close a gap. We've got a gap at 11.4. Close below that, and then we could start coming back down to these lows and potentially down to 6.4. Now, I've not done the fibs in the same way there, but if you pinball it, you should get similar levels. So I don't want to overcomplicate this, but it's just interesting to see how this could pan out. And so I've already eaten up about 20-25 minutes. So let's move on to gold. Started getting into gold a little too early a week or so ago, but it did perform well in the end. Yeah, it dipped a little underneath, just stopped me out, and the very next day it charged up. So started to get back in that a little higher than I wanted, really. Gold has had a fantastic week. So I think the key level of gold is the high of the prior week to 1577 is potentially a good place to get into gold. Let's have a look on the daily. This is a 20-day average, by the way. Anybody interested in that daily average? That's the 20-day average. I think yeah, it stands to reason that a dip all the way back to 1590 area 95 before we potentially do a push through. So we've now got that sort of pattern. So there's a decent ball flag, but I would be patient and try and get 1595 to see if that can push up. Yeah, I will look at silver because I like silver as well. Let's have a look at the, I'll go back to the weekly on this one. You can see it's an industrial metal rather than gold, which is more of a, which is, well, I would call gold a currency. So the fact it's an industrial metal and we've got this huge collapse in demand is shown up in that silver. And where am I going to take the trend line from the silver? I'll just try and make that trend line much more accurate. Let's draw that as accurate as I possibly can. Okay, so that's that. Let's draw a more recent trend line. Okay, I'm going to pull that trend line away for the moment. I still think see, all we've done on the silver daily is we've not quite retraced the 20-day average. The 20-day average is the midline for the Bollinger Bands, which is why I like it. I don't think on the weekly fibs is suggest, yeah, okay, that makes sense. Where's that drawn from? Okay, that's taken from the 15 lows. So if silver is going to work, it looks to me as if we could see 1375 area again. Closing, if we closed underneath that 15 lows, I would have December 15 lows, that is 2015 lows. If we closed under 1370, I would have said that's bearish. The fact we've popped right back in there could suggest that 1370 is buyable. I certainly wouldn't put much money on it, given the fact that's an industrial metal. Is in a very sad state, flat for the week. Oil has a big problem. I don't think the selling in oil is done yet. However, if we can hold this area here and start getting a higher close, we may come and test 28.30. But for now, I would leave oil alone and back off from oil. And like I said, unless we close above 25, and that could see a test of 30. And the other market, let's look at the currencies. Let's look at the cable. Now, the dollar is really key to this crisis because we've seen a massive inflow into the dollar. That was the initial reaction to this panic, was buying dollar and not gold. Gold has we're sort of 4 weeks into the real panic, and the gold has only just lifted up in the last week, whereas the dollar was the first to react to this panic once the indices really caved in. Now that actually that's a new low. The close above, we've actually engulfed the previous week. It's marginal, it's very marginal. I personally think any test of the pound into that area there I think that's I think that's a major pivot resistance. If we bounce into that and start selling, I will get short the pound. Euro. And let's stick to the daily on this one. I think if the euro, I think the euro could tuck into that 1118 before it gets another leg down. So my view on the euro is that's a 1, 2, 3 wave drop. Actually, that's a really hard fourth wave, isn't it? I think there's a structural issue up there, and any push into that, I think we could tuck into there before we get the next leg down. So I would short term look for more upside, but once we tuck into there, maybe the back end of this week, I think we'll then see a drop. Right. Anybody in the room trade stocks or got any questions so far? Okay, so I'm not getting into fundamentals, not getting into too many markets, just sticking to the basic technical structures that I'm seeing in these markets. Okay, let's now go to Lloyd's. Okay, that's something that I am interested in anyway. Right, I want to look at some, we'll look at some UK stocks first, and then we'll look at some US stocks. Now, I think the weekly, you can see I'm interested in this one because it's already laid out. I do need to update that. That is not up to date. Right, let's take this recent high and let's take this recent low. So we've come off the 127 extension, bounced off of just the 30 mark. That is not convincing for a long-term hold anyway. Boeing, yeah, I've been watching Boeing very, very carefully. We'll definitely look at Boeing in a second. I still think these markets, let's go to the daily. Now look how we're just coming into that. That's a bearish move heading into the 20-day average on the daily, sorry, and close lower on Friday. So I think any push into that 40 short term is going to get sold. I think we're going to potentially come and revisit 30. At which point, if we dip under 30 and then come back and hold, I'd be a buyer of Lloyd's. But I think that's going to come back, and like I said, potentially come into 28, 29. That's my theory. I'm going to keep a close eye on that, because I am interested in Lloyd's. The other one I'm interested in, keep shouting out any stocks. I'll come to the US in a minute. Let's look at Standard Chartered, because Standard Chartered likes a weak pound. This one favors a weak pound because of their international business. And so let's see. What am I going to take? I don't want to go too far back. I want to keep this a bit more sensible. Let's take that. No, that's not going to work. No, Okay, let's just stick to some fibs. Let's just fib the last range. See, to my way of thinking, this is relative strength. Now, this is a what do I mean by that? The fact we've not come down to these lows, I guess we breached these lows. No, I take that back. The fact we breached these lows, I take it back. Again, I would look for that to come back, maybe make a new low, and if we then make a start closing above that low, then I start to buy. We have got extreme RSI. No sign the MACD giving anything like a buy signal on this weekly, so I think we are still short. And Fresnillo. Now, I think these lows were definitely buyable in this one. Still plenty of time for this. There's still plenty of time. I'm nowhere near a hurry to jump into these stocks. So anything around the £5.96 mark, I think is buyable. That's a very decent performance over the last couple of weeks, and so I would be patient and see if we could get a retest of anything close to anything under 600. 630, sorry, 530, 550 might be a good one for that one. And now this is one I've been talking about in my trading room. I've been talking about selling this all back in the last year. Bricks and mortar, I know these guys got online business as well, but anybody's got a big commitment to bricks and mortar like Next was always vulnerable for my money, and that's why I had this alarmed and ready to short this one. I've been shorting bricks and mortar retailers for at least 3 or 4 years, at least. Macy's in the US was one of my favorites to short. I would wait, and I'm going to move that alarm now to, I'm going to attempt to, I'd be interested in getting short up there around about the 50% mark. A couple of US stocks I've been interested in. Medtronic. I like Medtronic a lot. That's a massive move. Been buying dips on this one. Any push in, any drop into around about the 80, 81, I think is buyable to get that back to at least 100 plus. Bristol Myers Squibb. Any push down into the 50 area, 47 will be obviously much better if you see it. That's all I'm liking on that one. And let's look at Boeing now. I personally don't like it. I don't know what the latest is in terms of Boeing getting a bailout. I haven't followed this one enough to know what anybody who Anthony, who was it was buying Boeing? Yeah, what's the latest on the bailout on Boeing? I'm assuming they need a bailout. I don't know for sure. So we've broken up above a key area. If you're really bullish Boeing, you might see 120, 125. It's not for me. I think there are better stocks out there. But all it's done on the daily is moved into the 20-day average and closed lower. It's the biggest component of the Dow. That's the reason why I like it a lot. But some of the big bellwethers, they're all very similar trade chart patterns, aren't they? All the weeklies are bounced in line with obviously the indices, hence the indices bounce. But it's at the moment, I just like techs, and on the upside, I like techs and good healthcare stocks. Not so much the biotechs. Biotechs always tend to do well tend to start to pick up midsummer. Let's look at some other some good techs. So Netflix, a lot of people at home watching Netflix. So that's had a nice bounce. How could you have traded Netflix? Well, if you had fibbed that high or even this low, that's the zone support 283, and we've not come into, oops, and we've not touched 283. Again, plenty of time. Might well come and see that 323. See, to my way of thinking, that Netflix is a much better buy than Boeing for me. I mean, if you've got a long-term view on something like Boeing and Goldman Sachs, and you're very patient, then you should potentially do really well. I just think it's going to be a bumpy ride, and who knows? Maybe they'll get some fantastic bailout, and they get the Max plane back in the air, and the share will skyrocket. Who knows? None of us know exactly where these charts are going to be this time next week, let alone this time tomorrow. Facebook is an obvious one. See, Facebook is stumbling. Let's look at that on a daily. Bumped into the 20-day average. 20-day average is still trending lower. That's why I'm very, very wary about holding anything at the moment, and why, if on pure technicals, the indices look lower, unless we start pushing above those 4-hour levels from last week's highs. Right. Anybody want me to look at anything else before I push off? Okay, so I've got a handful of stocks. Let's look at Spotify. Didn't have a great week. Plenty of scope to wait patiently for this one. Now it didn't once, and that's a potentially very bullish chart. It didn't once close underneath that weekly trend line. So potentially on Spotify, that could be a good place to get in. Around about the 115, 120 could be a good place to get in on Spotify, because if it then subsequently closes above 150, 155, that could get back to the 200. So I'm definitely keeping a very close eye on that one. Let's look at, okay, Google. Apple is, of course, an obvious one that we should look at. I should look at that in the first place anyway. It's got such a cash mountain still. Right, so these lower levels here survived intact. So it never closed underneath that fib level. It came down there and closed higher on Monday the 23rd, last Monday. So looks potentially like a head and shoulders, a bullish head and shoulders. So we've got shoulder, head, shoulder. So any retest of this 240, any retest of that 240 and subsequent close above 260 could see that push back at least into 280, 300. So keep an eye out for 239, 235, 239. And Tesla. Tesla's performed well. This is the weekly stood up incredibly well. I still think, like everything else, short term lower. I mean, that's an impressive close. To have held that trend line into Friday is impressive, but we're not above the 20-day average. I mean, any chart that can't close above a 20-day average is still shortable to me. I mean, look how Apple performed above the 20-day average. We dipped under the 20-day average here, but then once we started closing higher, we just trended up. And as soon as we got underneath that 20 again, it was all shortable. And we're still not over the 20. So that is, it's held up very well, but you'd need to have a higher close in the first half of the week minimum for my money. So it's well worth being patient with that one, I think. Car sales in China have just fallen off the edge, and they're about to, it sounds an obvious statement to me, but I think we're going to see car sales fall off an edge in the US if they haven't already. Surely they must have done that already. Right, Amazon. I just want to look at Pfizer before I do that, because I've got some interest in Pfizer. So the jury's out on this one. We could still, who knows, we could even come and see at 27 on Pfizer. Same story, bumped into the 20-day average and pulling away from the 20-day average. This is pro real time. It's free if you have an account with IG Index, or you can go to prorealtime.com and pay a small fee for the data. Otherwise, if you want it free, you'll need to open an account with IG Index. There are a couple of other brokers who use it as well. Can't remember who they are, but go and have a look at their Pro Real Time's website and you will see. Amazon. Right, just gonna look at Amazon and then I'll finish up. I've got something for you at the end, so hold on tight. Let me just go and find that. Now, of course, Amazon are working flat out in this environment, aren't they? Now, above the 20-day average, I think this has got to be the only stock we've looked at that's above the 20-day average. How about that? Not even Apple is above the 20-day average, but Amazon is. So huge amount of resistance above. And key support under there. I think we could, if we all the time we're above that 20-day average, it's still viable, and close above this trend line, and we could come back to the highs. I think it's more likely we're going to see 1795, 1800 personally. Having said that, I'm going to track that now and see if that's the case. I think at the very least we'll come back into this apex that's at 1790, 1800, 18. Anybody else? Okay, so if you are not on my database, if you would like information and daily briefings, come on this page here. In fact, let me go right to the capture page. If you want to go on my database, or you can either use that box there or this one here. I'll post that into YouTube as well. Right, and I'm going to be launching a very cheap newsletter this week. In fact, I'm going to launch it tomorrow. It's all prepared, and it's going to be a very modest, nominal few pounds a month. There'll be a free trial, and it's going to cover all the essential levels for the indices, gold and silver, and a few of my favorite stocks. Okay, so make sure you are on my database. If you received an email from me today, then you're on my database. If you haven't, then register and stay tuned. Right, last call for, yes, it is recording. We've done a very, very extensive recording bin, so I will get you a link to that. I believe you must be on my database bin, so I will send everybody a link to recording on the database. If not, register now, because we did a really I showed everybody a really good technique for working out what to expect from the Dow and the indices very early on. Something that works really, really well. If you are interested in day trading, anybody interested in day trading and wants to come in my live trading room, we are doing really well on the Dow. We're exploiting the Dow. I have been trading more of the the S&P minis. If you want to day trade and join us in the live trading room, then have a look at Scalper School. And this will tell you all about what we do in the live trading room and alerts to your mobile. That's going really well. Looking forward to and looking to up the ante on that and expand that. Okay, so I'll send you the link to, well, you can find the link on, it's all on the website. You can find it all, it's all hooked up. I just realized I've sent links privately and not, I'll send links to the briefing on there. It's a bit crazy, isn't it? Right. Any more questions? Final call for questions. Otherwise, I will go and enjoy what's left of my weekend and leave it there. All right, thanks everybody. And now the next one, the next free one is Wednesday at 6 p.m. Now, Wednesday at 6 p.m., you will need to come to this link here on the home page. You drop down to this link here. Let me make sure this is still. Right, if you want to join me for the updates on Wednesday, you need this link. Oh, I've done it privately again. Apologies. Right, that's the link for the Wednesday free session as well. Right, so thank you very much for joining me. I hope you enjoy that, guys. Any more questions, you can always email me. If you're interested in the newsletter, make sure you're all logged onto the newsletter, onto the briefings database there. Otherwise, enjoy what's left of your weekend and happy trading. Thanks, everybody. Bye for now.